Hey insiders, I'm Nick. Today we've got a blockbuster finance story that rewrites Washington's playbook on tech funding. Let's dive in. You heard that right. The US government just snapped up almost 10% of Intel stock, deploying CHIPS Act funds in an unprecedented equity purchase that flips decades of funding norms. On August 22, 2025, Washington announced it acquired a 9.9% stake in Intel, one of the world's most critical chipmakers. The deal carries an $8.9 billion valuation, the first time modern federal funds have been channeled into direct equity ownership of a private sector giant. Let's break down how that $8.9 billion transforms into Intel stock. It's all about share counts and price per unit. The government subscribed for 433.3 million newly issued Intel shares at exactly $20.47 each in a single tranche. Funding came from two authorized pots, $5.7 billion from the CHIPS and Science Act grants, and $3.2 billion from the Secure Enclave program. That's existing commitments, not new taxpayer outlays. So no fresh spending, just converting previously approved grants into an ownership position. Intel's official statement calls this a passive equity purchase to avoid politicization. No board seats, no micromanagement of day-to-day operations. But the agreement includes contractual protections and a warrant that could let the government increase its stake by up to another 5%. Why choose equity over grants or loans? Senior officials say it aligns public money with corporate success and potentially generates returns for taxpayers if Intel thrives. President Trump praised the partnership, predicting it will accelerate domestic factory build-outs, strengthen national security, and align corporate incentives with public interest on key domestic fab projects. The White House and Commerce Department emphasized this move preserves U.S. industrial capacity, safeguards critical supply chains, and aims to spur innovation hubs across U.S. heartland chip regions. The market's reaction was nearly instant. Intel shares jumped about 5.5% on the news, reflecting investor approval of capital infusion and a federal backstop. Politically, the deal sparks fierce debate. Supporters hail bold industrial leadership, while critics across the aisle warn of excessive state involvement in private enterprise. Some lawmakers demand full transparency on legal safeguards and oversight mechanisms. Upcoming hearings and regulatory reviews will probe every detail of this arrangement. For Intel, federal backing reduces near-term financial risk and injects capital into its foundry expansion, key to challenging global leaders like TSMC and Samsung, and giving its domestic roadmap crucial momentum. Yet with taxpayer equity comes accountability. Intel must deliver results or face public and political backlash, as questions arise about procurement influence and competition fairness. Remember, part of this equity originates from the Secure Enclave program, undeniably tying defense supply guarantees directly to Intel's operational milestones. Looking ahead, SEC filings will detail the government's shareholder rights and restrictions, offering clarity on exactly how Washington exercises its investment power. Congressional hearings are likely as policymakers seek to grasp the full implications of direct public equity ownership in a private sector leader. If this model extends to other strategic industries, think aerospace, batteries, biotech, it could redefine how the US supports and safeguards critical sectors, spinning up new manufacturing ecosystems. This deal blends political theater with pragmatic policymaking, providing Intel the resources to pursue its manufacturing ambitions while showcasing fiscal stewardship. Ultimately, it sets a new blueprint for state involvement in private industry, rekindling debates over economic boundaries, investor protections, and the future of American industrial policy. So, finance buffs, is this an ingenious strategy to supercharge US tech, or a slippery slope toward excessive government control? Let me know in the comments below. If you enjoyed this breakdown, smash that like button and subscribe to Stocks and Crypto Insiders for deep market insights every Tuesday and Friday.